All right, so now before we move to the second product, I want us to discuss assembly part now, so that we can have a better understanding about this illustration. Now we have gathered the material and the direct cost involved in the production of cement gum. But however, how do they assemble this product? Because now we have cement gum 10 kg finished product, 2,000 bags, and we only imputed the raw material. So now, as a matter of fact, we need to we need to assemble this raw material in order to know the cost of the production. That is the cost of producing one bag of cement gum. So if that should be the case, then we have to move to what we call assembly parts or inventory assemblies. Can you see that now? Inventory assemblies. Let me explain again. Here is the raw material for the production of cement gum and the direct costs and indirect cost for the production of cement gum. If they want to produce cement gum, they will need material A, they will need material B, then they will need packaging sack, then labor cost and production overhead, which is indirect cost. Is that not? And then if you look at that, there are other charges. Is that clear now? So now when they now collate everything together, the cost of raw material, cost of labor, and other indirect costs, then what is the production cost of producing a single bag of cement gum? So in that case, we need to go back to the inventory assemblies, because that is where we'll be able to input the numbers of finished products on ground. Are we there now? So now let me go back to the QuickBook. Then I'll select inventory part again, new, and this time we are moving to inventory assemblies. These inventory assemblies, it will show us the costs of producing one bag of cement gum. So now here now, we need to type the name of that product, and then when you look at the illustration, we have cement gum 10 kg. Is that not so? I'll just come back here that the name of that item is a cement gum. We have cement gum which is 10 kg. Okay, 10 kg. Then I'll close that. Now they said we should give it category, so and then that is our finished product. So I'll click this one, then I'll type finished product. Our finished product. Okay, then I'll just move to the next one. Then I purchased this assembly item from vendor. No, because this is a manufacturing company. I wouldn't now. They convert the raw material into the finished product. So we are not going to check this one. Then the next one is our unit of a measurement. We measure it per bag. So now we click per bag. And now they now said cost, but we cannot choose the cost not until when we fix this bill of material. Are we there now? The bill of material. And now let's settle the case of this bill of material. And this cost of goods sold, yes, we are okay by now. Are we there now? We're still okay with this cost of goods sold, except that we want to separate cost of goods sold of cement gum and that of the waterproofing cement. So now, but now let me still leave it here. Now the bill of material, it means that what do we, the component of that cement gum, starting from material 1, material 2, labor cost, sack, and that of production overhead. So now let me choose. The first one is that they will use OPC material. Is that not? And that OPC material, how many kg would they use to produce 10 kg of this cement gum? They will use 10 kg. So I'll type 10 kg. Now it means that if they use 10 kg, what will be the cost of it? And the cost will be 12,000. Is that clear now? The second material there is that of WPC. And for them to use 10 kg of material A, which is OPC, they will need 5 kg for this one, 5 kg. So I move to next. So it means that material A costs 12,000, material B 12,500. While the next thing that will be needed for the production of these cement goods is that of our packaging sack. How would they now? And then remember, production of a single bag, how would they now, of 10 kg. So they will need one bag, which is 700. And then when you look at this total bill of material, we have what? We have 25,200. Now, then the next one that we are going to select are the labor cost and the production cost. Is that clear now? Labor cost and production cost. So now let me select labor cost, and then for one bag it is 300 naira. And the last cost here is our production overhead, so which is 500. So now it means that the total cost now is 26,000 naira. So I'll just come back to the cost here that I want to use total BOM cost, that is bill of material cost. So now that is the cost of it. Why the selling price from the illustration? Let's go back to this illustration. They now say that the selling price of this cement gum should be 30,000 naira. So I'm going back to my QuickBooks accounting. Then I'll select the selling price to be 30,000 naira. Okay, and then if this is 30,000, and then the income account should be cement gum. Is that clear now? Cement gum. Now I need to input the available finished goods. Are we there? So I'm going back to this. Then let me scroll down. Now you can see that we cannot scroll down, is that not? But the problem is we have to change this top icon. Are we there now? So now I'll just go back to my view. Then I'll turn it to left, and then immediately you will see that we can input our finished product on hand. So then let's go back to the illustration and see the available. Now we have 2,000 bags of finished product. So I'm going back to this, and then I'll input 2,000 product, 2,000. And if we should build another cement gum if we have less than 500 bags on the store. So now this is how to assemble that product. So now it means that if we want to produce a bag of cement gum, we will need 10 kg of material A, 5 kg of material B, 1 packaging sack, then other costs, which is our labor cost and production overhead cost. Why the total cost is 26,000 naira. We all know that total cost is different from selling price. Is that not? Good. The total cost comprises both the direct cost and the indirect cost. And why the selling price is the combination of cost and margin of profit. So now that is why the cost now from our bill of material is 26,000, while the selling price is 30,000 naira from the illustration. As you can see that the selling price is 30,000 naira. So now let's now see what will happen. So I'll just click OK, and let me go back to our inventory valuation. So you can just click it here. You will see that now look at our inventory valuation. Let me click all. Now you will see that we have direct cost, which is that of sack. Then we have finished product. Are we there now? The finished product, which is cement gum, 10 kg, and the available or hand is 2,000. Why costs of production is 26,000, and the selling price is 30,000. Is what is 30,000 naira. So now the cost now is 52 million naira. Why the expected value, retail's value, is what is 60 million. It means that if we sell these 2,000 bags, we should be expecting 60 million. Now let's go back to our balance sheet and see the value of our inventory item there. When you look at inventory item now, let me close all this bank, this fixed assets. Let me close everything. Okay, now let me close this as well. Let me close this as well. Okay. Oh, let me just close that fixed asset. Let me close liability. Okay, now we can see it now. at a glance, we can see it. Let me close this current asset as well. Now, okay, let me open this current asset. We can see that under this current asset, we have inventory. Is that not? And the inventory asset, it comprises of our raw material and that of the finished product. If I double click this one now, it will give us the summary. I would then how we arrived at 177,650. It shows that an adjusting entry, that is raw material value this amount for the raw material 1, raw material 2 is this, then the packaging sack value this, and finished product, which is cement gum, is 52 million naira. So in total now, our inventory assets for Xerox building for product 1 is 177,650,000. I think you grab this point. Now let's move to the second product.